Hello, my friend. You join me from the Lunar Café, and today we're going to talk about dollar cost averaging and how these are the real winners. The real winners, consistent winners in crypto are people that adopt dollar cost averaging. We're going to talk about what that is and why it's a good move, or would have been a good move, or why people that have done it are smiling very broadly at the moment. So we're going to discuss what it is and how it works, and we're going to look at what would have happened if you put £50 a week into Bitcoin over the last 3 years, 5 years, and 10 years. And we're going to look at what that would have given you, what it would have given you, my friend. So this is just really just to open your mind, is to stop trying to time the market and start looking at strategies that are proved to win. That's what we're going to talk about today. That's the broader topic, my friend. And if you want some of that, then join me on a little journey into the current state of crypto. Now, the current state of crypto is not very good, my friends. Look, we're back down to 29 in the fear and greed. We're seeing, look, Bitcoin got rinsed over the weekend. In fact, all crypto got rinsed over the weekend. Here we are with the top 100 cryptos, and this is just an indicator of why crypto is so volatile and why it's not for the faint-hearted. Look, over the last 7 days, let's click this on the top 100 cryptos. So if you got in River, it's happy days for you. But I'm going to guess most of you aren't in River. But even, with the right one, you could be lucky. But here's the other side. So Monero and Dash, which have done so well lately, have taken a massive, massive pullback. So this is the state of crypto. This is what can happen. And again, Arbitrum's taken a smack. So is Ethereum. Ethereum's taken a big smack in the last 7 days. So crypto is very, very volatile. And over the weekend, it was very volatile. Now, here's where we always go. So I really want to bring your attention to this. This is institutional inflow to crypto, and these are ETFs or exchange traded funds. And we see with Bitcoin, it has just been red, rinsing red for days now. These are the big money, and this is market manipulation. Let's call it what it is, my friends. This is market manipulation. The institutions that be, and especially you've got Fidelity here, you have got BlackRock, the big bad BlackRock have been rinsing crypto and draining out their Bitcoin. Now, other things I want to bring your attention to, if we go to Solana, we still see with Solana, no one takes any money out of Solana. Nothing. Oh, well, okay, maybe one, maybe one or two. So look all the way down and see, look, Solana is mainly green. It's mainly inflow into Solana. Occasionally, you might get a few people taking stuff out, but it's generally green. And the same with ETFs for XRP. Now, these are relatively new, but what we really want to look at is all crypto ETFs. So this is the institutional money. Now, this is coinglass.com. This should be checked up regularly. If you're monitoring the crypto market, if you're going to do what I tell you today, dollar cost average, you'll never need to check this again, probably. So we see massive outflows from crypto. So we see 139 million outflow of crypto ETF money, which is why the market's going down. And that stinks of manipulation to me. Stinks of manipulation. But that's another story for another day. So let's go here. I asked a couple of questions today. I've asked Perplexity and ChatGPT, what are the big issues affecting crypto over the last few days? So here we have it. So the Bitcoin dropped from its high of 90K in earlier January just to below 87K, wiping out much of the month's gains and leaving January marginally negative. The pullback comes after a roughly 10 to 11% decline in mid-January above the 97K mark. So macro and geopolitical pressures. These are always going to affect crypto. It's going to affect all markets, but crypto gets particular volatility with macro pressures and with all wars and nonsense and tariffs and stuff like this. And People threatening to sell Bitcoin, that can cause it. ETF flows, which we've seen, Ethereum, and post-quantum security. So the Ethereum Foundation has just elevated post-quantum security to a top strategic priority, announcing a dedicated team and specific funding programs. So there you go, including a Poseidon Prize. Look at that for post-quantum cryptography initiatives. So here we are. So sentiment and narratives. Overall sentiment has shifted from January euphoria to more cautious stance, with investors debating whether the recent drawdown on healthy correction with a larger bull cycle, blah, 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 blah. So now discussions revolve around the resilience of digital gold. It's being questioned. Now, there's two ways to look at this. One is, oh no, this is panic, this is bad news for crypto. The other way of looking at it is that there's always a flush out. There's always massive high fear levels before the market goes up to flush out as many retail investors as possible. So there's two chains of thought. And I'm not going to tell you which one you should have. I'm just saying be aware of it. When maximum fear is in the market, that's usually a good time to start taking it seriously. But not always, my friend. It could have another pullback before any sort of upswing. We could be in the middle of a raging bear market. And some people are predicting that Bitcoin will go down to about 30K. I don't see that happening myself, but you need to be aware of both sides because there's too many people in crypto that are just the moon boys that just tell you how good things are going to be because that gets clicks. But you need to be real about this. ChatGPT, I asked it the same questions. So market volatility and price declines. So it's plunged sharply, which we know about this. The broader market is in a cautious consolidation phase. So XRP and some altcoins are defending key technical support levels with traders watching potential breakouts if resistance is reclaimed. So why it matters. Volatility impacts trader behavior, leverage positions and sentiment. Now, this is a big thing. We talked about this on the channel, leverage positions. If too many people go short, you can guarantee that the market will go up. And if too many people go long, you can guarantee it will sharply retrace down because the house always wins, my friends, and market makers will manipulate the market so that people don't get long leverage trades, especially when there's too much money on leverage. So there's rising security incidents and phishing attacks. Now, this is something everyone needs to be aware of. So a data breach in a French crypto tax platform exposed around 50,000 users, their records, and resulted in a ransom extortion demand. So these fit with the broader surge in scam and hack activity. Recent major reports highlight at least 16 to 17 billion in crypto linked fraud. Now, this is real, my friends. You've got to take your security seriously. You really do. As much crypto is lost by people not taking their security seriously as they're getting into the wrong coins and watching them flush out. So it is treacherous for the for people new to the space. Continued fraud we've talked about, and crypto hedge funds and institutional positioning. So Galaxy, which is apparently Mike Novogratz's firm, is launching a 100 million hedge fund to capitalize on crypto market volatility. And why it matters, institutional players adapting to market volatility can influence liquidity, investor sentiment, and longer term capital flows, even in a downtrend. So takeaway, high level snapshot. The market downturn and volatility, it matters because it triggers liquidation, sentiment shifts, and cautious investor positioning. Phishing and security breaches, greater risk of user funds, platforms and individuals targeted, fraud and enforcement, criminal charges and regulatory action reshape the industry, and institutional moves. So they move when we're fearful. So there's a concise summary. Now, let's look at this. The dollar cost average. So I asked if you put £50 a week into Bitcoin for the last 3 years, what would I have invested and what would it currently be worth? So let's talk about this. Some people just put loads of money in at one time. The safest way or the most proven track record way over time is to dollar cost average. This way, it doesn't matter what the market is up or down when you go in because it will even out over time. So rather than putting one big lump in, just put small amounts consistently over time. That way you catch the market at the highs and more importantly at the lows, my friend. But let's look how it would have worked out over just 3 years. If you've done that over 3 years, so here you go, you would have invested 7,800 in total. So it tells you then how much Bitcoin you'd have accumulated, which would be 0.15 of a Bitcoin. So, and what would that make it? So that would now be worth 10,100. So you'd have invested over 3 years 7,800 that would now currently be worth £10,150, which is a 30% gain. That's the last 3 years. Now, bear in mind, the last 3 years have not been great, my friend. So I asked, let's do it to 5 years. If you'd been doing this for 5 years, what would that now be worth? And we do it again. You'd have invested 13,000 and it goes through all the permutations, how much you would have had. You'd be sitting on almost zero point 0.4 Bitcoin, which would now be worth, as we see the result, current value would be 25. You would have virtually doubled your money if you'd been doing that for 5 years. Be sitting on 100% gain. So just for fun, for all the degens, if you'd been doing it over 10 years, let's bring this to life. Let's bring this to life. If you'd been doing exactly the same for 10 years, what would that be worth? You would have invested £26,000. And here's all the years. This is what it was worth. And what would that now be worth? And here you would be sitting on 5.4 Bitcoin, which means you would be sitting on 360,000, a 1,285% gain. 26,000 invested would now be worth £360,000, which is why dollar cost averaging over time. Time is the winner in Bitcoin. Now, even the most bearish people will tell you that Bitcoin, because of its fixed supply, is only going to go up over time. So it's never too late to get in. And this percentage gain, Bitcoin has outperformed everything bar none. Everything, every single thing in the world, Bitcoin has outperformed over time since its conception. So there's a lot of people out there. So, oh, it's too late for Bitcoin. Bitcoin's too expensive. But you can be sure that if you're alive in 10 years' time, you'll be looking back at this video and thinking, I wish I'd listened. I wish I'd got in. Now, here's the caveat. If quantum computers come in and get really powerful, yes, it could hack the whole system. Whole Bitcoin could go down. And this is what they want you to believe. And it is possible. Yes, there is. You could get hacked. There could be a high-level hack. Scammers are out there. It could be dangerous. There's a lot of danger in crypto. It's definitely not safe, my friends. But this is irrefutable. Of every asset in the world right now, there is nothing that would have made you more money than Bitcoin. And the thing that's second behind it is way second behind it, which is why crypto people probably don't explain it particularly well. But the dollar cost averaging model is probably the best explanation of all because it's undeniable over time. 26,000 to 360,000 if you've been putting £50 a week in for the last 10 years. And there you have it, my friend, the case for dollar cost averaging. But don't take my word for it. You go and do your own research. Go and look it up. Check those stats. It's too good to be true. That can't be right. Can it, Adam? Stop that nonsense. Well, go and check it. Go and check it. And you tell me if there's any asset that's come even close to outperforming Bitcoin. And I will tell you this for nothing, my friends. I can't find anything out there, which is why I'm here, Crypto Lunatic, talking about crypto to wake people up to what is actually going on beyond all the fluff and all the fuzz. And if you've enjoyed this, my friends, then please do subscribe to the channel for more of the same. Speaking of which, there's another video just there. But either way, stay lunatic, have fun, and make money with crypto.